When money leaves a business for the owner, it can happen in two very different ways, as a draw or as a dividend. A business draw is when the owner takes money or other assets out of the business for personal use. This is common in sole proprietorships and partnerships, where the business and the owner are closely connected. A draw is not treated as a business expense. Instead, it reduces the owner's equity in the business. In simple terms, the owner is taking back part of the value they already have in the company. For example, imagine a sole proprietor who owns a bakery. If she takes $2,000 from the business account to pay her personal rent, that is a draw. The bakery does not record it as a cost of doing business. It is recorded in the owner's equity account because the owner is withdrawing value from the business. Dividends are different. A dividend is a payment made by a corporation to its shareholders, usually out of profits. Only corporations pay dividends, and they are generally distributed after the company has earned money and decided to share some of it with owners. Dividends do not reduce revenue or operating profit. They come after profits have already been calculated and are distributed as a return to shareholders. For example, if a corporation earns a profit and its board of directors declares a $1 per share dividend, a shareholder who owns 500 shares would receive $500. That payment is a dividend, not a draw, because the company is a corporation and the money is being distributed to shareholders based on ownership. The key difference is this. Draws are owner withdrawals from businesses like sole proprietorships and partnerships, while dividends are profit distributions from corporations to shareholders. Draws are usually more flexible and can happen whenever the owner needs funds, but dividends are typically declared at specific times and depend on the company's profits and policies. So, if you own a small partnership and take cash out for personal use, that is a draw. If you own shares in a corporation and receive a payment from its earnings, that is a dividend. Both reduce what owners have in the business, but they work in different legal and accounting ways.